those bets that they would have. But let me also get the broader perspective of where markets are really heading. And joining me for that is Rishi Kohli. He's the managing partner and CIO for the hedge fund strategies at Incred Alternative Investments. Good morning, Rishi, and good to have you with us this morning. Let's get a sense of how we are seeing markets. We are at that historic moment where we've seen BSE listed firms and the market capitalization of them hit that 400 lakh crore mark yesterday for the first time, and BSE had managed to achieve just that 100 lakh crore back in 2014. So it's taken us 10 years, but we've seen this huge jump, and we're seeing so many people enter the markets. Do you still think, now that we are at these highs, do you still think people could, it would be a good time, or whether people should actually wait for that correction and then come in?
Yeah, good morning. Happy to be here. That's a very interesting question at a very opportune time, given that, elections are just around the corner. And obviously, this is a, typical question that all of us would have. So just taking a step back to give the larger perspective, interestingly, you mentioned that, since 2014, some data, etc. So, 10 years have gone by. So very interesting, really, really long term, if you look at it. Then, post the 2003 to 7 big bull market that we saw, and the decline post that in 2008 and 9, and some rally again in 2010, and then sort of markets kept trending up post 2010, but it was in a very, very low pace. So in fact, if you see the 2010 to 20, annualized returns at the index Nifty Sensex level, they are among the poorest, going back many decades. So that decadal return was really, really low. And then we sort of broke out of that sort of sideways uptrending slightly channel in end of 2020. So, when you break out of a 10-year long channel, even though it was slightly upward sloping, obviously you're talking of very, very long-term sort of bullishness. And at that point, at some point, I've said in media interviews that the next 10, 15 years are going to be very, very strong for India. So that is the larger backdrop. Now, within that, of course, you're having ups and downs since the end of 2020. Interestingly, from October 21 to June 23, again, more than 1.5 years, you had this consolidation in markets at an index level. And then in July 23, really, you broke out of that. And then again, post a few more months of consolidation in December 23, again, a more firm sort of breakout has happened. So when you combine these long-term cycles and long-term patterns with the immediate, signals that have come in, then yes, I mean, the long-term 10, 15-year view remains positive. The medium-term 2-3-year view remains positive given the July 23 and December 23 breakouts. In the near term, of course, we are all cautious because of the upcoming elections. What I think is, has high probability to happen is that we continue to be bullish going into the elections. April typically has a very strong seasonality. So apart from November, December, the last 2 months of the year, April is the other month in the year which has very strong seasonality. And, unless really some global news or geopolitics happens, markets typically around the world end up being positive. Initial part of this month, again, you've had some positive technical signals on both Nifty, Bank Nifty index. What is interesting is that April, while seasonally it is strong for both Nifty, Bank Nifty indices, typically it has been stronger for the banking index.
Right.
And given that banking index has, underperformed Nifty last few months, and even on a relative ratio basis, Bank Nifty by Nifty ratio sort of hit its oversold and support levels. There is a high probability that over April and May, Bank Nifty index, will do much better, and both on an absolute and a relative basis.
Right. Rishi,
Post that, of course, the election thing will take over, and it's a binary event. While largely a lot of expectations are priced in, and as long as that sort of happens, all may be stable. But even if there is some minor change in whatever the market expectations are, even if everything is smooth, there could be some volatility post that in June, July.
Right.
So
Rishi, I'll have to just take one moment from you here, because yes, you are speaking about those broader factors that could come into play. It is pretty much that wait and watch game, at least till the election. But that's not stopping people from really entering the market, at least if you have to see where they're really putting their money. Now, you did speak about the Bank Nifty, and we saw that make that all-time fresh highs of about 48,717 yesterday. It's pretty much ticking on those same lines right now, breaking those levels that you saw. But earlier in March, at least, we did see that index pretty much crack by 9%. We saw that huge drubbing that HDFC particularly also saw. But among the banking pack, and maybe I can take this question to Kunal, because there are a couple of queries that is coming on ICICI Bank per se. We did see this, we are hearing of news about a block deal in Axis Bank. So maybe on ICICI Bank, Kunal, what would be your take? And that would perhaps also answer Vikram Mehra's question on how should one be looking at ICICI Bank.
Broader consolidation on the chart, if I look at the intraday chart, because assuming this is a short-term query, from March so far, it's been almost 1 month and 10 days. The counter has been in sideways consolidation, support being 1070. And on the higher side, counter is facing the resistance at around 1105. So right now, it's in between. If our viewer is holding on to the position, then with the stop loss of 1085, which is a trailing stop loss, one can hold on, and he has to book the profits near 1105. By any chance counter manages to cross 1110, then certainly we can initiate a fresh long. Otherwise, be cautious near these levels.
Right. One more query that I'd want you to address, Kunal, and this is coming from Naveen Tyagi. He's asking that he has started stock SIPs, and this perhaps could help a broader set of viewers as well. And this he's taken 4 market heavyweights, Reliance, ITC, L&T and Infosys is what he's picked. He's asking whether it is okay to start this stock SIP at the current levels of where these stocks are. Maybe you can just throw some light on how this really works, and whether stock SIP and with these index heavyweights, what will they really be offering?
See, again, there are different types of investing, right? So if we talk about SIP, the interesting part of SIP is that your money amount will go regularly in the market, but at the same time, when the markets decline, your contribution will remain the same, but the number of shares will increase in your portfolio. So yes, from SIP point of view, there is no problem. You can start buying even from the present level and continue doing it. The consistency is something which matters a lot when it comes to SIP. Just continue for next 5 years, it certainly will end up making really good money. But I follow a little different approach, and that is, I start investing only when there are headlines in the newspapers which are looking very scary. I start buying when the margin of safety is very high for my personal investments. So yes, SIP definitely works at the present level, but the good risk reward ratio is certainly not on cards. SIP in large caps which are like Reliance, which is trading really good and which is doing really good at the near to the high, would not really make sense to me. Rather, PSU banking, private banking stocks are looking really good. So even from the present level to say next 1 year, I think private sector allocation can be private sector banks allocation can be little higher compared to, the Reliances of the world, which are near to the high. But
Right.
SIP is a different story altogether. Investor can definitely continue for next 5 years, even from the present levels.
Yeah, so SIPs are pretty much playing it safe, and especially if you've seen these heavyweights and how they've been performing in the past few sessions, at least they're pretty much lending that momentum to the benchmarks, we could say. But we're also pretty much at the cusp of the Q4 earnings season as well. And if you have to see, profit growth of the Nifty 50 companies is likely to be the slowest in the last 5 quarters, at least. Brokerages are estimating this for this upcoming Q4 results. Let me go back to Rishi and ask him if he's also anticipating some bit of trouble when it comes to these Q4 results, or do you think that is pretty much going to be what is going to drive the market momentum ahead?
Yeah, no. So, I mean, the view there is broadly what you mentioned, that there is definitely a slowdown in the last quarter, and obviously it will be mixed depending on the sectors, etc. But as we know, right, markets move 3 to 6 months ahead. I mean, I personally believe 6 months ahead, but I mean, there's a whole host of data all across the spectrum. So given that, I would say it's largely sort of factored in some sense. And the other interesting point is that obviously, sector rotation will continue. So what is important, and from a quantitative perspective, since I'm a quant guy, there is sector rotation models that we have. And what is very interesting is that whether it's bull markets, bear markets, sideways markets, the tough patch in 21, 22, or the bullish last 6, 9 months, there are always certain sectors and stocks, obviously, in those sectors that are doing well. And I expect nothing different in the next 3 to 6 months. Even if there is some volatility in that June-July period or some hiccups in April in some sectors where the numbers come in poorer, despite that, there would be others that would be doing well. So I think as long as one has a sort of a relative strength, relative momentum kind of approach on sectors as well, I think that can be very healthy in the next few months, even if there is volatility or toughness in certain market sectors.
But do you expect
And
any
yeah.
do you expect any major FII inflows, at least into the Indian markets, given that we are, almost going to see that inclusion into that global emerging market bond index as well? That could really change the picture, or do you think people will take some time to understand what really is happening there?
No, I agree. I think the emerging market global bond index inclusion, clearly the fixed income flows will start coming immediately because, as you know, every month for a year, those large flows are going to come from June onwards. So I think, I mean, those bond market flows obviously are going to come, and along with that, a lot of other FPIs, which are more fixed income players will come in. From the equity side, of course, it will be mixed because I think for now there would be the normal flows heading into elections. Obviously, people will still wait and watch. Post that, I would expect it to increase again. If market sort of holds up, there's no large correction, etc., then it would come in immediately. If there is any correction post elections, then they would again wait and watch. But I've seen this in the past also many times over the last 20 years that flow momentum really follows the market momentum. So they would be slow initially, but if the market momentum continues, all is well. Then there would be a significant flow in the last 4 or 5 months of the year, according to me.
Right. Well, hold your thought. Let me try and get one more query answered there by Kunal, and this one is on Castrol that is coming in. Ashish Diwan wants to know your view on, Alex wants to know your view on Castrol India, and what are the charts really saying on this particular counter?
See, more of a sideways consolidation counter, but yes, it's trading near to the breakout point, and that breakout point is somewhere near to 212.13, which is almost the current market price. By any chance the counter manages to close above that 212.13 kind of mark decisively, I think it can give a momentum trade from here with the stop loss of around 203. One can then initiate a buy with a target of around 225. But because our viewer is already holding, assuming he is holding on to the position, for now the trailing stop loss is 205. Hold on with that trailing stop loss. If the counter manages to close about 213, I think a quick momentum rally might just emerge on this.
One more, and a rather new one, we would say, and I don't know whether you would have this coverage of IREDA, and that counter has been seeing some great momentum. In fact, just a few days back, it was among the top gainers, 10% odd gains that it saw in a single day. But what's the view on IREDA?
So this is a counter which we can't avoid when we come on media, at least, because this has been a regular query counter. Right. If you look at the overall trend, it's a trending counter. But the only trouble on this counter, which I felt, is that there is a risk management which goes for toss because of circuit behavior of the counter. But yeah, nonetheless, right now the counter is in positive trend, 122 to 170, 180 kind of rally, which was again a very steep rally, very fast rally. With the trailing stop loss of 160, one can certainly hold on. I would really avoid this counter when the market's at the peak, because by any chance, if the market declines and the counter continues with the decline, we might not be even able to get an exit. But if someone is willing to hold on with the stop loss of 160, one can certainly ride the positive rally so far.
Right. So you're pretty much cautious, we would say, about IREDA, and there is a way to play that counter, but quite interesting there, and hope that answers Vishwa Jarin as well as Harish Prashahar's query on IREDA particularly. But my final question, maybe you, Kunal, can only wrap it up for us and give us what would be his top picks of the trade today, and maybe even in a longer term, if somebody is looking at what would be your top picks, and then I would go back to Rishi to get his sectoral picks. Kunal, to you first.
Yeah, so I have 3 counters now. These counters are certainly not for the day or 2 days. It's going to be for next 10 to 15 days. The first one is Strides Pharma. Now, Strides Pharma in today's session also made a 52 weeks high. It's trading right now at 846. Now one can think of accumulating this counter at the present level. Stop loss can be 825. and the targets can be 900 in the mid to long term. The second counter is IDBI Bank. Now, what we are seeing is this counter is being in sideways consolidation since last 3 days. Counter showed a very good momentum yesterday, but again, still in sideways consolidation with the present level of 89.5. One can initiate a buy. The stop loss will be around 87, and the first target will be 100, and then we'll keep revising the targets again. And the third one is JSW Infra. Now, this counter is right now trading at 245, very much in trend, sideways consolidation since last 3 to 4 days. I think this is offering a good risk reward ratio. So with the stop loss of around 240, one can initiate a buy even at JSW Infra, and the targets can be 265. All three counters are looking very positive, even from mid to long term. If the rally emerges, the request to all our viewers will be come back to our show again, ask your query to someone who is available for the trailing stop loss, and hold the position for long term. I think it can reward really good if the rally emerges strong.
Right, quite interesting picks that Kunal has there for our viewers. But quickly to Rishi Kohli then, what are your top 3 themes that you would be looking out for, that you see playing out, and how should one be then looking at them?
Sure. So from an immediate sort of sector perspective, we discussed banks. I think metals is the other interesting one. Historically, it has been more cyclical, but what we are seeing over the last 1 or 2 years is that it's sort of become more secular, and given certain, again, patterns, breakouts, and longer term cycles that have developed, there's something cooking there. It looks like, it could be not only in the near term, but also sort of a medium to long term, continue to be bullish. And interestingly, even globally, the metal index and the global commodities index, etc., have broken out after 10 or 15 years, depending on which index globally you're looking at. So the local, obviously, metals and commodities, as we know, is more a global theme. And both globally and locally, they've given very positive medium to long term signals. So metals is something definitely I would keep on the radar. And given that, the metal stocks move large whenever there is momentum, there could be good gains to be had there. And then real estate and infra, I mean, that is a broader theme again. Over the last 6 to 12 months, I mean, they've done well, but I think those are something that going into elections as well should do very well. And again, in the medium to long term, should do very well. And again, some of the real estate names especially can end up moving really big as the momentum picks up. So those couple of sectors, I think, could give outsized returns compared to other things. And apart from those two, which could give outsized returns, the normal ones we discussed, bank, and within bank specifically, I mean, obviously, private banks have underperformed, but I think that phase seems to be over. So I think they'll start outperforming again. And then within PSU banks, the larger ones have obviously already moved a lot in the last 2-3 years. I think the mid-tier PSU banks could start doing much better as well.
Right.
So those are the pockets that I would focus on.
Interesting. So you have banks among those sectoral plays, and you'd prefer the private banks within that space. You also have metals, which is being, hammering quite higher, we would say, taking those indices as well as higher. And the other player definitely being real estate, that among your top gainers today. In fact, the realty index also seeing some good momentum in today's trade. But we are sitting quite comfortably. We just saw Sensex, surpass that 75,000 level there at opening bell just now, just a few points below that target. The Bank Nifty also trading a little flat, we would say, at this point, but we have the whole day to go and trades to make. So perhaps all of that will go into play to see newer highs that pretty much most of these indices are taking on. But let me thank both my guests, Kunal Rambia as well as Rishi Kohli, for joining us this morning and giving us their views and perspective on stocks as well as sectors that we could be looking out for in our trading day. Well, to all our viewers who've tuned in, thank you so much. Do come back and send us all your feedback, because that's what we're going to be addressing and changing perhaps to meet your needs. But also do send us your queries, because that's what we try to answer through the course of this show. So you can send it to us on our live feed, and that's when we can ask our technical experts to give you and help you with your trade. But for everyone that's tuned in and the whole team that puts this together, thanks so much for watching.